Time now for the futures update. We'll continue our conversation with Stan Harley of the Harley Market Letter. We're looking at the CRB index here, down almost 2.5 points, down 2.44 to 184.33. Big hit in the commodities and futures markets today. Big hit in the metals. Gold down $3.80 an ounce, and a sizable hit too for crude oil, down 48 cents a barrel. The grains were weaker. This commodity deflation environment, I don't know what it does for your interest rate forecast or deflation or you know, where we're headed from here, but how do you analyze the bond market based on what commodity prices are doing?
I've been bearish on bonds for the last several months. We hit an important high on October the 5th, and we've been coming down. I think we're going to trend basically sideways to modestly downward. We've got an important cycle low in bonds that averages about 26 months. That's due to bottom in June of this year, only 4 months from now. Between now and then, I'm expecting a modest snapback rally, which may well have begun today, then some sideways action, but the trend is down in bonds into June of this year.
How do you explain a day like today where we had the Dow up over 100 points initially, the NASDAQ was very strong, up more than 40 points, and a negative NASDAQ at the close, and a Dow that's up just 22 points?
It's what I characterize as a consolidation band. We had an accelerated price advance. It went exactly 90 days, from October the 8th to January the 8th. And accelerated price advances, I have found, run either 90, sometimes as long as 99 calendar days. This went exactly 90 days. When you get that kind of dynamic in the market tends to congest sideways. By congesting sideways as opposed to coming down, what you do is you work off the market's excesses and also the cyclical schedules. And it's also indicative in the end of an extremely buoyant market condition. I like that. That bodes well for higher prices ahead.
Okay. The metals markets, which were weaker, you can talk about metals.
Metals are basing.
You could have said that 20 years ago.
Well,
almost.
Yes, yeah. They are quietly basing. I think the basing structure is going to last for several more months. It's rare for commodities to base, but when they do, the ultimate resolution to the upside is usually quite strong. So I think for the next 3 to 3.5 months, I think you're going to see continued basing in the metals. Silver, of course, is the strongest of all of them right now, but about 3.5 months hence, we should see a very powerful move in the metals.
All right. Taking a look, and that's based on cycle work?
That's based on cyclical work, yes,
okay.
And price structure.
All right. The NASDAQ versus the Dow.
The NASDAQ, of course, is much more volatile than the Dow and the S&P. It ran up much higher. It got far more extended above its moving averages. Of course, Joe Granville's pointed that out. I think it's going to be more susceptible to more of a pullback here in the next 2 weeks than will be the Dow or the S&P. But I don't think you've seen the high in that index yet. I think it will top out with the broad market, and I'm looking for an important high probably in mid-April. All
right, you mentioned Joe Granville, so I will too, who we just spoke with earlier today, who cites the deteriorating advanced decline line, deteriorating new highs and lows, very narrow leadership or participation as kind of a precursor to a major tumble in the markets.
Joe Granville is an exceptionally bright individual, and he's got just a wealth of experience. I think he does fine work. I just don't share his view that we're in danger of a major market decline here. I just don't see that.
Right. We'll come back and we'll look at charts that you can explain that view. Stan Harley will be back in a moment. We'll look at some more charts, take your calls in just a moment.